elevated. So let's trade Delta Airlines now with Tim Bigham, options strategist at Pilot AI. Tim, it's interesting just the difference a week can make, but some really important lines out of Delta this morning. How would you approach an example trade for this name?
Yeah, Sam, absolutely. Finally a little bit of liftoff in Delta here, no pun intended, but the stock has found support at that 55 level on numerous occasions in the past here. So really using that as a level I want to kind of hang my hat on going forward here. It was 2 earnings ago that we had a gap open. Really hasn't gotten below there appreciably. So I'm taking advantage of still high implied volatility and just selling it out of the money bull put spread, bringing in about 65 cents for selling the 55.50 put spread out in traditional Aprils. I would not be chasing Delta or really any stocks here or in this market environment. The fact that we're seeing IV hang in there with stocks really not having much of a sell-off overall, it's a market that is really resilient here. So I'd be more than willing to be paid to be patient, take advantage of the nervousness out there by being out of the money, being a buyer on about an 8% dip here. So I think the guidance will certainly help, kind of put a floor maybe in Delta. But I don't think stocks generally, and Delta especially given the move today, have much further upside until we get some further guidance coming out of the Mideast.
Okay, but for now, at least, as you mentioned, I mean, stocks seem to be, the markets in a better mood this week, perhaps as some of those elevated oil prices have come off a bit. Yes, of course, still higher than what we were looking at. I mean, I just saw US diesel is up about $5 a gallon right now. So keeping in tabs on any sort of degree of demand destruction that could very much affect this market as far as some of those corporate earnings are concerned in the macro picture. But for now, as I said, things are holding up. What do you make of it?
Yeah, I think it's actually holding up way better than certainly I expected here. But as you alluded to, Sam, diesel prices and the cost for some of these companies, let alone the consumers, will be a big bite here the longer the tensions go on, the longer oil in essence stays at these levels. So I think that there's another kind of headwind for stocks besides valuations, which are still rather rich here. And it's kind of important to remember the market generally still less than 5% off the all-time highs, even given what seems like a big pullback in stocks here. So at some point, I think we might finally have that inevitable breakdown below that kind of 6,700 support level on the S&P with conviction. But until then, play it as a trading range and take advantage of implied volatility. I think selling out of the money credit spreads using options is the way to play it. Take advantage of volatility. Let volatility be your opportunity.
Yeah, we've certainly seen investors step in and buy the dip here. It's interesting that you mentioned that 5% decline we've seen. In fact, Ed Yardeni has been out with a note saying that we had expected a 10 to 15% drawdown or correction in stocks, but this 5% decline from the all-time highs, he thinks might be the extent of it. So that is to do with the fact that forecasting the weather, he says, is easier than the timeline of this war, but we've had a bit of a break in the weather this week. So really interesting comments. Obviously, we'll continue to watch these markets, a very headline-driven one, so we continue to keep one eye on the Middle East. Tim, always appreciate it. Thanks so much for joining us today. That is Tim Bigham there, options strategist, Pilot AI. Coming